Yan, good morning. So we're going to discuss our exercises number 3 about cost accounting and control and ating introduction about accounting for materials and as well as the accounting for job order costing. So here in our exercise, we're going to have a problem solving on how would you account for as an example of a transaction of a job order costing, in which we are going to use a perpetual inventory system and the voucher system. Okay, let's start. So our first transaction is purchase of materials for 120,000. So because we are using voucher system, so that would be a credit to vouchers payable, so 120,000, and a debit for materials, 120,000. Next. So after the purchase of materials, there is a return of the materials, the supplier, about 6,000. So that would be a reversing entry for the previous journal entry that we have made. So debit vouchers payable 6,000, then credit materials 6,000. Next. So out of the 120,000, there is a return of 6,000. So bawasan yung ating materials, and then so our next transaction is the issuance of materials for direct materials and indirect materials. So for the issuance of direct materials, so you're going to debit it as part of the working process, 70,000. Then you are going to debit the indirect materials for factory overhead control for 12,000. Then credit materials for 82,000. It means that out of the previous amount of the materials, 82,000 has been issued. 70,000 direct materials and then indirect materials for 12,000. The factory overhead control was used to account for the indirect materials because it is part of the actual indirect material that has been used in the production. So that is factory overhead control. Next. Yan. So we have the items for payroll. I think these are given naman. So meron tayong SS premiums, 3,000, pag-ibig premiums, 2,000, and withholding taxes payable, 1,000. So the journal entry to record for the payroll is debit payroll, 60,000. Credit SSS premiums payable, 3,000. Pag-ibig premiums payable, 2,000. And withholding taxes payable, 1,000. And then the difference between the deductions and the payroll would be credited to vouchers payable, 54,000. Next. So for the breakdown of the payroll, there is the percentage given. The 50% of the payroll has been used for the production. 15% was used for fact of the indirect labor. 10% for selling expenses, and then 25% for administrative expenses. So we're going to simply allocate the payroll for the following accounts. We're going to debit work in process for 30,000, factory overhead control 9,000, selling expenses 6,000, then administrative expenses 15,000, then credit payroll 60,000. Next. And so after that, there is the application of the factory overhead control based on the production. It said that the factory overhead would be applied based on 80% of the direct labor cost. So as we have account for the work in process before, that is 30,000, that is the direct labor. So we're going to multiply 30,000 times 80%, and that is 24,000. So the journal entry would be debit work in process, then credit applied factory overhead, about 24,000. Next, incurred additional factory overhead, cost from factory repairs, about 2,500. So that would be debit factory overhead control for 2,500, and then credit vouchers payable 2,500. Next, for the payment of vouchers, we're going to debit vouchers payable 170,500 and credit cash 170,500. So this 170,500 was the total of the amounts that has been computed before, uh, starting from the purchase of materials, for the returns of materials, then yung ating vouchers payable for payroll, as well as yung vouchers payable din na natin sa factory repairs. Yan. Next, we're going to close the applied factory overhead to factory overhead control. So kung ano yung value ng ating applied factory overhead, that would be the amount to be used for the closing entry. So that would be simply debit applied factory overhead, the amount of 24,000, which was computed earlier, 80% of 30,000, then credit factory overhead control, 24,000. Next, after that, we're going to close the factory overhead control to factory overhead variance. So this variance uh, resulted on the difference between the applied factory overhead and the factory overhead control. So if the applied factory overhead is greater than the factory overhead control, so it means there is an over-applied factory overhead. While if the applied factory overhead is lower than the factory overhead control, it means that there is an under-applied factory overhead. Uh, it is important to account for the factory overhead variance because the amount that has been recorded on the work in process, or the factory overhead that has been accounted for the work in process, is the applied factory overhead, not the factory overhead control. Because applied factory overhead is the one that is being used under the work in process, because it is very difficult to determine the actual factory overhead control unless the manufacturing process has been finished. We it is very difficult to determine the 100% of the actual factory overhead. So it is a practice, or it is a procedure to account for the factory overhead using an estimate, which is yung applied factory overhead. So in this uh, closing entry for the factory overhead variance, this is the process on which we are reconciling the factory overhead control and the applied factory overhead, wherein any difference between the two is accounted for, and then it is adjusted on the computation of the cost of goods sold. If the variance resulted to over-applied factory overhead, it means the factory overhead accounted for is much higher than the actual, so it is considered favorable because it would be deducted further to the cost of goods sold. While if there would be under-applied factory overhead, so you're going to add additional factory overhead. So it means it is considered unfavorable because it would make the cost of goods sold much higher. This is a test for the ano eh, effectiveness and efficiency of the factory overhead, the variance. Because if you are going to set the budget for the applied factory overhead, if the budget would be higher, so there would be a return you're going to deduct. But if the budget would be lower than the actual, it means your planned amount of factory overhead is not enough to cover up the actual, or you can say that the actual becomes much higher than the planned cost of the factory overhead. And that means, so it is considered unfavorable in part of the company if there would be under-applied factory overhead. Okay, let's proceed to the next one. Journal entry for the work in process. Uh, I think it is stated naman that the cost of goods manufactured is at 105,000. So it simply debit finished goods, then credit work in process for 105,000. Okay? There is a sales on account, about 120,000. So simply debit accounts receivable 120,000 and credit sales 120,000. So we also determined that the cost of the goods sold is about 96,000. So simply debit cost of goods sold 96,000, then credit finished goods 96,000. Here we are going to identify the different balances of the accounts that we use in accounting for the cost of goods sold. So first, meron tayong cost of goods sold in the amount of 96,000. But because there is an factory overhead variance, so you're going to adjust the cost of goods sold. We're going to deduct the 500,000 to the 96,000. So that would be 95,500. So the balance of the cost of goods sold after adjustment is 95,500. Um, it The factory overhead variance is not always deducted in part of the cost of goods sold. It may be added then. In this case, it is over-applied factory overhead. So we're going to deduct the 500 pesos. But if there would be case that the factory overhead is under-applied, it means that the actual is higher than the applied factory overhead. So you're going to add the factory overhead variance. But in our case, so it would be deducted. Next, cost of goods manufactured. I think madali lang to kasi given naman. So the balance of the cost of goods manufactured is 105. For the finished goods inventory, so simply you're going to deduct the cost of goods sold of 96,000 based on the number of manufactured. So the difference is 9,000. So the balance of the finished goods inventory is 9,000. It is simply computed here because there is no beginning balance for the finished goods inventory. Next. So here is the computation of the work in process inventory ending. Let's start. Meron tayong material, 70,000. Next, meron tayong direct labor, 30,000. Applied factory overhead, 24,000. Take note that the amount of the factory overhead is 24,000, which is the applied factory overhead. And then, the total amount of debit is 124,000. Therefore, meron tayong credit of 105,000. Therefore, the balance of work in process inventory ending is 19,000. Okay? Next. We have also the materials inventory ending computation. So meron tayong purchases, 120,000. Purchase returns, so that would be credit, 6,000. Issuance of 82,000. So meron tayong total debit of 120,000, total credit 88,000. Therefore, the difference is 32,000 debit. So that is the balance of the materials inventory ending. For the summary of the computations, I've given this presentation of the cost of goods sold. So we have direct material, 70,000. Direct labor, 30,000. Factory overhead, 24,000. Total manufacturing cost, 120,000. Yung work in process beginning is zero because it is the first operation of the business. So there's no beginning inventory. So less work in process ending, 19,000. Therefore, the total cost of goods manufactured is 105,000. Then, meron din tayong finished goods beginning, zero. Katulad siya ng work in process beginning, zero. Therefore, meron tayong cost of goods sold before adjustment in the amount of 96,000 after deducting the finished goods ending 9,000 to 105. So here we can see the adjustment for the factory overhead variance of 500 pesos. Therefore, the total cost of goods sold after adjustment is 95,500. Okay? Yan. So here in the computation of the cost of goods sold, you can see the balances of the ending inventories. Meron tayong work in process in ending inventory, 19,000, as well as finished goods ending, 9,000. So, dapat balance to kasi katulad ng ating na-compute natin before. Kita naman natin that the cost of goods sold before adjustment is 96,000. Ang ating cost of goods sold after adjustment is 95,500. The same computation that we have got before. So, you can remember this format in computing for the cost of goods sold because this is the format used in manufacturing concerns. I think that's all for the discussion for exercises number 3. So I hope you learn a lot for the exercises and then we are going to discuss more about accounting for materials. So, okay, that's all. Thank you.